Why do nearly 90% of traders lose money? Is it because the market is manipulated? Is it because they don't have the perfect indicator? Or is it simply bad luck? No. The real reason is much harder to accept. The biggest enemy of a trader isn't the market. It's the person staring back at you in the mirror. The market doesn't care about your opinions, your hopes, or your fears. It rewards discipline and punishes emotion. Most people believe trading is about finding the perfect strategy. They spend months searching for secret indicators, magical chart patterns, and systems that promise guaranteed profits. But the truth is that most traders don't lose because of their strategy. They lose because of their habits. The first habit is impatience. Most traders think they need to be in the market all the time. They believe more trades mean more money. But the market doesn't pay you for being active. It pays you for being right. The greatest traders understood that waiting is a skill. Sometimes the most profitable decision is to do absolutely nothing. The market offers endless opportunities, but only a few are worth risking your capital. The ability to wait separates professionals from amateurs. The second habit is refusing to admit you're wrong. Many traders become emotionally attached to their positions. Instead of accepting a small loss, they keep holding, hoping the market will reverse. Some even add more money to losing trades, convinced they will eventually be proven right. Hope is not a strategy. Every successful trader knows that losses are part of the business. Small losses are simply operating expenses. Large losses happen when pride takes control. The faster you accept a mistake, the faster you protect your account and move on to the next opportunity. The third habit is chasing every opportunity. Every day there's a new stock making headlines, a cryptocurrency soaring, or a market moving sharply. Beginners feel they have to catch every move, but professionals understand something different. You don't need every opportunity. You only need the right opportunity. Trying to trade everything usually means mastering nothing. Focus is far more valuable than excitement. The fourth habit is ignoring risk. Most beginners ask one question before entering a trade. How much can I make? Professionals ask a different question. How much can I lose? That single shift in thinking changes everything. Protecting your capital is your first responsibility as a trader. Without capital, there is no next trade. A single reckless decision can wipe out months of hard work. The traders who survive are not necessarily the smartest. They are the ones who manage risk better than everyone else. The fifth habit is allowing emotions to make decisions. Fear tells you to exit winning trades too early. Greed tells you to stay in losing trades too long. Revenge pushes you to enter another trade immediately after a loss. Excitement convinces you to buy after everyone else already has. The market constantly tests your emotions. It rewards discipline and punishes impulsive decisions. Professional traders don't eliminate emotions. They simply refuse to let emotions make their decisions. The sixth habit is wanting to get rich overnight. Social media has created the illusion that trading is easy. People see screenshots of massive profits, luxury lifestyles, and stories of overnight success. What they rarely see are the years of study, discipline, losses, and emotional battles behind those results. Trading is not a shortcut to wealth. It is a profession that rewards consistency. Those who chase quick money often lose it quickly. Those who focus on mastering the process eventually allow the profits to take care of themselves. The seventh habit is failing to learn from mistakes. Many traders lose money, feel frustrated, and immediately jump into another trade. Successful traders do something different. They review every trade. They ask themselves why they entered, why they exited, whether they followed their rules, whether emotions influenced their decisions. Every losing trade contains a lesson. Ignore the lesson, and the market will charge you tuition again. The eighth habit is following the crowd. When everyone is excited, most people feel safe buying. When everyone is panicking, they feel compelled to sell. But markets are driven by psychology. The crowd is often ruled by emotion rather than logic. The ability to think independently is one of the greatest advantages a trader can develop. Popularity doesn't create profits. Discipline does. The ninth habit is becoming overconfident after success. Ironically, winning can be more dangerous than losing. After a series of profitable trades, many traders begin believing they cannot fail. They increase their position sizes. They ignore their own rules. They take unnecessary risks. Then one bad trade wipes out weeks or even months of gains. Confidence is essential. Overconfidence is expensive. The market has a way of humbling everyone who believes they have conquered it. The 10th habit is treating trading like gambling instead of a business. Every successful business keeps records. It measures performance. It follows a plan. It learns from mistakes. Trading should be no different. Without a trading journal, clear rules, and consistent reviews, you're relying on luck rather than skill. Professional traders approach every decision with structure and discipline. The market doesn't reward hope. It doesn't reward predictions. It rewards preparation. The greatest lesson any trader can learn is that success begins long before entering a trade. It begins with patience, with discipline, with emotional control, with respect for risk. Every chart you study is ultimately a reflection of human psychology. Every price movement represents fear, greed, confidence, doubt, optimism, and panic. If you cannot control your own emotions, the market will eventually expose your weaknesses. The goal is not to win every trade. No trader does. The goal is to protect your capital, follow your plan, and remain consistent over hundreds of trades. Trading is not about proving you're right. It's about making good decisions repeatedly. The market will always offer another opportunity. The question is whether you'll still have the discipline and the capital to take it. Master your emotions. Respect risk. Stay patient. Think independently. Because in the end, the greatest edge in trading isn't found on a chart. It's found in mastering yourself.